Head of Economic Research at the Centre for Policy Studies, and a very good afternoon to you. So what's your view on the action the bank is taking there to keep the banks sound and the credit flowing?
Well, I think it's very welcome. I think what it suggests is that they think uncertainty from the Brexit referendum is a problem, but perhaps not as much of a problem as some commentators are thinking. So he has relaxed capital controls. That's good. It could increase lending into the economy, and it avoids the risk of credit drying up. But he could have gone a lot further. So, for example, he could have made some curtailments to mortgage lending. He could have increased that. He didn't, in fact, do that. He could have increased the funding to lending scheme by the UK Treasury. He didn't do that either. So I think what it suggests is that yes, uncertainty is a problem, but he hasn't used all the tools that he could do. So perhaps it's not such a problem.
OK, what more tools do you think he's keeping in the locker?
Well, I think, for example, he could loosen mortgage requirements. I misspoke before. He could loosen mortgage requirements. That could obviously increase lending into the economy. Or he could increase the funding for lending scheme, which is sponsored by the UK Treasury. And that, again, could increase lending. Of course, he could also, on the monetary policy side, reduce rates. I think that wouldn't be advisable. I think some of the problems we have in the economy because we have rates too low. So I think it's good. I think it would be better if he didn't pursue that.
It's all a bit too early, though, isn't it, for anyone to draw parallels with what's gone in the past. These big economic tectonic plates take a while to shift if they are going to shift.
Well, absolutely. And I think something important also to highlight is that Brexit isn't the only thing that's been affecting the UK economy. So George Osborne, towards the beginning of this year, spoke about the risks, the global risks to the UK economy. Now, that included problems in the emerging economies. It also included problems in the euro area. And he didn't actually mention Brexit as a problem. So I think some of the problems that we're seeing in the UK economy aren't directly attributable to Brexit, but also these broader problems around the globe.
And there are these straws in the winds there, aren't there? You can explain a lot more about it than I can, about international bond yields being at lowest record low levels. And what does that tell us?
Well, absolutely. I think that's quite encouraging, actually. What that suggests is that people aren't afraid of putting their money into government debt. And that suggests a degree of confidence in the UK government. And I think it's very welcome that bond yields have fallen since the Brexit referendum. And I think that we should take some encouragement from that. So, there is a lot of uncertainty in the economy at the moment. There's no doubt about that. And a lot of that's because of political instability, both, from the Conservative Party and the Labour Party. But there does seem to be a degree of confidence in the government. And I think that's sort of shown by the sort of record low bond yields.
And on that broader point, I think you touched on it there, the problems particularly within the Eurozone. I mean, Brexit may look rather far-sighted if, for instance, reading about the Italian economy and the Italian banks are in an awful state.
Well, absolutely. That's completely correct. If you compare the state of our banking system to that in Italy or other countries such as Greece, we're very well placed to weather this storm. So the Bank of England for the last 6 years has been stress testing a lot of banks. They've passed those stress tests. There are a lot of capital requirements in place, which means that there's a good buffer to make sure we're weathered from the storm up and coming. Whereas the Italian banking system is looking incredibly precarious. Renzi, the Italian president, has actually had to, he's looking to inject a lot of liquidity into Italian banks, and that's arisen from the Brexit. So actually, I think what this shows is that Brexit may actually impact a lot of economies in Europe far more than in the UK. And I think what this suggests is that there's no benefit for anyone from an acrimonious divorce between the UK and the European Union.
Interesting stuff. Must end it there, though. Thank you very much indeed, Daniel Mahoney there from the Centre for Policy Studies.